Thank you, Trevin, for joining me on this conversation. So whoever's listening, I'll just give a little bit of background between how you and I know each other. We are actually, I don't know, like a few kilometers apart. We're both on the island of Bali, just down the street from each other. But we decided to do the video recording on Zoom because it's auto editing makes it so much easier to just quickly have a conversation and post it. You and I met earlier this year at Bali Bustle in Seminyak, co-working, co-living space. And the first thing I noticed was we were at game night and I noticed that you had these giant headphones on. And I was like, wait, are those $300 or $400 AirPods? You're the first person I met who had those. And you were wearing them while we were playing the game. And explain your reasoning to me, why you were wearing them.
Yeah. So I had a meeting when I was playing that game. So I was juggling between the two.
So we won't disclose that you were slightly playing a game while well, we can cut that part out. Okay. One of the reasons why I thought it would be great for us to record our conversations was because when I would talk to you in my crypto journey, I had just started a few months before I met you. I think I met you in March or April. And I had really started, I'd invested in Bitcoin for years. I went kind of a big after the 2018 crash when it went from like 20,000 to 3,000 is around there is when I started loading up for myself and my family. And that was the only thing that I had been invested in. And I thought everything else was kind of scammy. And probably 9 times out of 10, you would have been right in that phase in the early Bitcoin / crypto boom and bust. But then DeFi summer happened in 2020, and it really caught my attention because it was legit. It seemed like legit use cases, and there was this whole ecosystem being built around it. So end of 2020, I started getting very serious about studying this after my initial dismissals, as I think everybody maybe has a bit of that in our psychology where we initially don't like anything that we don't understand. So cut to a few months later, I meet you, and you were one of the only other people that I met that was enthusiastic about crypto, and you had a very unique perspective because you're one of the handful of people I know who's actually coding in the space. So give us a little bit of introduction around your background and kind of the unique characteristics about what I think, you don't have to be super humble, but what I think makes you special for sitting in Indonesia. What's your background?
Yeah, so I'm a mobile developer, and I've been one for about 3-4 years now. So coming into the crypto space, I like to see things from a programmer's point of view. So yes, the crypto world is filled with speculations and people are holding, things like that. But at the end of the day, I think we still need to get down to earth. And that is, if you're choosing to invest or speculate your money based on something that's not very robust or most likely not able to compete, then typically I would suggest to stay away from those. So my background is mostly on the mobile side, but at the same time, right after I met Shirkan, I actually took a Udacity blockchain developer course and learned a lot about how to write smart contracts using Solidity. And then I thought that it's not enough. And now I am joining the first batch of Emergo's Cardano developer program. So I'm learning.
Yes, and I get to take a 1,000% credit because I believe, I'm not 100% sure, that I turned you on to Cardano. Even though you'll go on and do brilliant things in the space, I believe I'm the first human being to talk to you about Cardano.
Well, I gotta admit, the first time I put my money on Ethereum, I had this sense of tribalism or maximalism, and I think it's very, very common in the crypto space. And so I didn't want to look at any other coins or cryptocurrencies. I thought that the rest is probably a scam as well. But then I think this is for everyone. If you just look, if you try to read more about other cryptocurrencies, it doesn't mean you're going against your investment. Just try to learn. I think you'll find some incredible group of people and incredible new technologies that are being built. So yes, Sirkan gets a bit of that. Yeah.
Yeah, I get the credit. But here's what I exactly what you're saying is there is an emotional, I noticed myself doing this. Okay, so I went in, it was Bitcoin first, everything was a scam. And then it was like, well, DeFi is like, seems like legit. And it's all these basically like microeconomic fantasies that were theoretical. And when I majored in econ in undergrad, and I was like, oh my God, they're like actually building it and it's working at that communal level. And so then I was on Ethereum, and then I started listening to crypto, like generally on YouTube, the algorithm surface, Charles Hodgkinson's, I hope I'm pronouncing his name right. And he was so brilliant, and he made a very strong case for why it's still super early in crypto, and how his argument was that, as one of the, whatever, 6 or 8 guys who helped found Ethereum, that he was making the argument that Ethereum had limitations, and that his generation blockchain, Cardano, was a Gen 3 blockchain with all these other properties that are much more sustainable longer term. So then I deep dove into Cardano for a while, and I was mesmerized by his articulation. And I haven't even gone through all of the papers that they put up on their website. And so I was still a novice. And then can I tell you, I was listening to podcasts on the crypto space, whatever, Bankless or XYZ podcast. And this guy, I think it was Invest Like the Best, this guy, something O'Shaughnessy, he asked somebody about interesting blockchains, and he said Solana. And I thought, oh, this idiot, he's mispronouncing Cardano. That's what he must have wanted to say. And then that was one of the first times I heard the name. And so I've taken the perspective that, like, and then eventually it was on my list of things to study, and I invested in Solana as well. And I am of the opinion that at minimum, there's going to be probably 2 or more L1 chains, as we can perceive how we describe it today. And probably more than likely, there might be a ton of different chains, and we might describe a lot of things as L1s when we're kind of like forcing our previous models in our head. We're forcing a new technology into like old analogies, which may not be perfect. But anyways, that is definitely a thing that we're all kind of like, I feel like it's like a mental hygiene of like, let's wash our brains of this like tribalism. However, there is one caveat to that. I think for programmers who are not pure, like if you're doing it from an investment perspective or like maybe a business case perspective, that's one thing. But for programmers, I do think some amount of tribalism does make sense, because you're trying to recruit people to your team, and like the more awesome there's a limited number of awesome developers on the planet at any given time, and the more awesome developers you have on your team, the better your team is versus the other team to some degree.
Right. Yeah, totally agree with that. Also, with programmers, we can't study everything. We have to choose where we want to build, and then there will always be trade-offs. So for example, I'm moving away from Solidity to Plutus, which is what people build or what people use to write smart contracts on Cardano. And one of the reasons why is because of how secure or how predictable, how deterministic the nature of the programming environment there is. So I can talk more about the details later, but point is, programmers definitely, they not only want to recruit, they want to make sure that they build the best products, and also they can iterate as quickly as possible, so that's why.
And you actually hit on the most important point that underlines my thesis, that I think there's going to be 2 to a few like L1 chains, because the choke point for these chains is actually the language. And there may be at some point a universal language or something like where where like Facebook created, I think React Native, where like they created a language that can like split over both Android and iOS. But
Yeah.
at least in the short to medium term, the choke point is that developers have limited time and limited fluency in languages that they can support. And so, if and that kind of determines, in my opinion, it makes a ton of sense that you'd have at least two L1s, because you need to price check. Like in America, it'd be Uber and Lyft. You want to check both prices. In Indonesia, it would be Gojek and Grab. You're going to always need at least two, otherwise the single actor has like monopoly pricing, monopoly type behaviors.
Right.
But then when you don't say, well, there's going to be a 50 L1 change, because I don't think even as brilliant as a programmer as you are, like you're not going to be able to like keep 50 different protocols and languages in your head at the same time and just equally code and everything. So tell me about your Cardano journey. So you started shifting from Ethereum to Cardano around March, April, right?
Right. So actually in April, that's when I got to Bali. That's when I actually met you.
So maybe April, May. Like it was a month or two after we met. I think.
Yeah. So a few months after I stayed in Bali, I took the Solidity developer program, or sorry, it's the Udacity blockchain developer program, but I learned Solidity. And I come from a mobile development background. So one of the things that I look at is one, the tooling. If we're dealing with, if you want to build something, you need good tools. And one of the things I noticed is the Ethereum environment has really, really good tools. And it's really easy to make the next Shiba Inu, for example, as in programmatically. Making it is just literally following a template. So it's quite solid in terms of comparing to other blockchains that support smart contracts. It's very, very good. But then one of the things I noticed.
Ethereum?
Yes. So Ethereum's development environment is already quite mature. So programmers, if they want to learn how to write smart contracts, for example, in my Cardano developer program, people actually learn Ethereum because they need to learn Solidity, for example, because, or at least get a glimpse of it, because they need to sort of be able to read. Yeah, they just need to share some of the concepts, and it's applicable in Cardano as well. But one of the things I noticed is when it comes to security, you're actually, when you're building a dApp on Ethereum, imagine you're trying to build a mobile app on, let's say, Android or iOS, but there's no layer of security, as in you have to build it yourself. So every app on iOS has no layer of security, or Android, so you have to make one from scratch. Now,
explain to me why someone just doesn't make a standardized security system or whatever that you could copy from GitHub?
Because the security system depends on what you're trying to build. So you can follow some concepts, existing concepts, but you can't copy and paste it. You can copy and paste a template when you want to launch your own tokens. So they already have that. That's because tokens, they follow the standard in Ethereum called ERC20. And for NFTs, it's ERC721. If you follow that, then you can pretty much make sure that everything's safe, as in there's already a template that helps you make sure that it's safe. And but it's different for dApps, because for dApps, you're trying to build, it's very flexible. There's no predetermined set of rules. If you're trying to build a DEX, if you're trying to build a supply chain monitoring system or whatever, it's very, very different.
So that's the advantage in terms of the heterogeneity of Ethereum applications. They're one of the main reasons why there's so many applications on Ethereum versus the other chains that are trying to catch up. Is the trade-off they made there is to make it super flexible, but then also your argument is that it's also super insecure.
Right. As in, let me just put it this way. If anything that you build on the blockchain, you're more or less going to be dealing with people's money. Now, you don't want someone who's not qualified to deal with your money. So that's the thing in Solidity. The average person like me, we can learn how to do it, but not everyone knows how to deal with the security or understands what the risks in that world is.
And then, I think we had briefly discussed it, but you had mentioned, and in my mind when you were talking, I was like forming a 3-point axis, or like a 3-point pyramid in my head of like, there are these 3 issues that are the most important for change.
The trilemma.
Yeah. And one is security, one is flexibility, and the other is speed.
Or I think
how would you frame it?
I think it's scalability.
Oh, scalability.
The other one is security, and also actually forgot that. But
let's go through. I think to arrive at how we would frame it is what are the advantages? So you coded in both Ethereum and Cardano. So you started in Ethereum like almost everybody, and then you're moving to Cardano the last several months. And what are the advantages of Cardano over Ethereum? That's probably the best way to start.
So one thing I noticed straight away from Cardano is they actually try to limit, or they try to move away some of the calculations off from the blockchain. As in, whenever you want to perform any operations on the blockchain, you actually have to pay, because you have to pay for the gas fees. And the more calculations you have, the higher the gas fee. So Cardano tries to...
That's one of the variables driving the gas fees.
Right. So the more complex the smart contract is, for example, to give you a very specific example, there's something called a for loop in programming. Okay. In a smart contract, you don't want, or you try to avoid as best as you can to use a for loop, because then it'll drive the gas fee higher, and that's just a bad user experience. So in Cardano, it's designed to have an off-chain and an on-chain component, but in Ethereum, there's already an off-chain component. But for example, if you want to look up the price of something on Cardano, depending on how the developer makes it, you can actually look it up off-chain instead of just having to.
Is it doing the calculation on my processor, on my phone, or on my laptop instead of in the Ethereum blockchain?
Right. So if you're using a wallet, then you could do it on the wallet instead of just having to interact with the blockchain.
The wallet is pulling resources from the computer instead of pulling it from Ethereum's world computer. Right.
Yeah. Okay. So you don't have to interact with the blockchain all the time.
So then that's more of that classic like centralized versus edge computing is like, where do we organize? Because ultimately blockchains are distributed. It's like software that's distributed across different computers around the world, and and it's agnostic in terms of what kind of chips are doing the processes, whether it's an efficient GPU or something, or a bit miner or whatever it is. And so you're saying Cardano, one of the ways that they increase security, or you mean one of the ways that they decrease the price is by doing it on the edge on your device?
Right. And
what's the advantage? Is it increasing security or lowering the price, or both?
So one, it does lower the transaction cost or the gas fee. Okay. Two, it just means that the network is less congested because it needs to perform fewer operations. And also in terms of the scalability of the blockchain. See, a blockchain is unlike a traditional server. You can't delete the data there, which means everything that you do needs to be as efficient as possible. You don't want to publish trash onto the blockchain. You don't want redundancies on the blockchain, because then it's going to stay forever and there's no forgiveness. So if we have an on-chain component, what it's able to do is make the blockchain lighter, as in you don't have to post as much data on the blockchain, because if it grows too quickly, then you're going to have to centralize it, as in later in the future, 50 years from now, you're going to have, or it's only going to be able to be taken care of by large servers. Does that make sense?
That was the argument you were making against Solana, which was they have you were saying the entire Cardano chain, I think if I recall correctly, is like on 13 gigs, and that Solana is because they're favoring speed and lower cost, but they're generating huge volumes of data that are going to need to be stored somewhere. And it's like you were saying petabytes or hexabytes or some giant number. And that is the criticism of Solana right now, is that it's hyper centralized. It's literally like 20 guys, 20 organizations that are doing all the stuff, all the validation.
So I have to be neutral on this because I'm not a god and I don't know what's going to happen. As in, I think I told you this before, people are betting on different strategies, hoping which one works better. But I'm gonna stick with something called Murphy's Law. Murphy's Law basically says whatever can go wrong will go wrong, which means just choose something that probability-wise has a lot smaller chances of going wrong. And so going with Solana, I was told, it's based on my understanding, a blockchain is not designed to perform fast transactions on its own. And now hear me out on this, because I think this might drive some people crazy.
I want to hear it.
Yeah, so like I said before, a blockchain is a chain of blocks. And the more you post on the blockchain, the bigger it grows.
Yeah.
Now, if you want to make a transaction faster, or if you want to make a blockchain perform transactions faster, you need to create blocks faster as well. So for example, in Bitcoin, I think it only creates a block every 10 minutes, which is why the transactions per second is only about 6, I think. And that's not because Satoshi Nakamoto doesn't know how to make it faster. No, it's because he deliberately didn't want to make it decentralized. And so
he didn't want to make it centralized. So he wanted to keep it.
He want to make it centralized. Yes. So going back with Solana, they're going the opposite direction. They're posting as much data as they can, as in they're producing blocks every 400 milliseconds, if I'm not wrong, or so. And so you have 50,000 transactions per second on Solana.
Yeah, and I think they're on track. They were saying, based on 5 nanometer chips, and then eventually 4 and 3 is what the near term horizon is. That they're on track to go from I think 40 right now roughly to 80 soon, and then they were talking about what they can see with their own current hardware roadmap of what's coming down the pike is 400,000. I think was the highest number I heard on a podcast from the founder. So with all those, you've got 400,000 transactions in a single state, pre-sharded, right? No shard, one single state.
Right.
And it's going to be generating, you sped up a printer that's shooting off all this data. It has to be stored somewhere. And so your argument was that with all that crazy high volume of data, we're talking exponentially or parabolically higher growth than blockchain, than Bitcoin. It's not going to be able to, you're not just going to be able to have some random drive hold the entire chain. So then people can hunt down and turn off that chain at some point. Whereas with Bitcoin, China literally was the majority miner or near majority miner up until during this year, and they decided to shut down the entire thing, and we're turning off Bitcoin in China, and literally it dipped for a few weeks. All the miners just picked up their machines and moved to Kazakhstan and Southeast Asia and XYZ countries, and then it's rip roaring again. No, just a tiny blip and nothing happened. And likely it was because the design of it is partially because it's so easy to keep the chain alive on all these decentralized things because it has such a light footprint. That's partially the reason why it's more robust, right?
Right.
And then the argument is, and that's one end of the pole. And then at the other end is Solana, which is going for max speed, like 400,000 or whatever, 40,000 today versus six transactions, 6 blocks a second versus 40,000 in November 2021 timeframe. And somewhere in between is Ethereum. That's, you know what, I don't know how many transactions a second are they going?
I think Ethereum, correct me if I'm wrong, or I think someone can Google this up for me, but I think it's above 10, as in only about 10.
Something like that. And then we've got, is Cardano going at a higher rate? What's Cardano's transaction?
Cardano's, I think, is about the same as Bitcoin, but I need to double check.
Okay.
Yeah.
So, but we've got this spectrum now set up in our heads. We've got this large, slow blocks. Are Bitcoin's blocks big or small? I don't understand. That part I haven't got.
Bitcoin's, I think it's compared to
block size is larger or smaller?
Compared to Ethereum, I think it's smaller. Compared to Solana, definitely smaller. Yeah, it's smaller.
Okay, so Solana's got bigger block sizes and much more velocity of blocks.
Yes.
So we've got bigger and faster on one end. And so that's creating all this quote unquote data weight. And on the other end, we have this minuscule but hyper decentralized with the founder disappeared Bitcoin. And so that can set up the horizon of what's we know is possible today. Of all the major coins. And Ethereum is somewhere to the if Bitcoin is all the way to the left, Ethereum is somewhere to the right of that, and Cardano might be a little bit more to the right of that, and then on the far end is Solana.
Right. And also bear in mind, what Solana is doing is also in line with what Matic and Binance Smart Chain is doing. As in, it's centralized, but the TPS is significantly higher. So does that make sense? Like, you can see sort of the arguments here, or some of the design decisions that people are making, which is they want to typically sacrifice security, which is decentralization, to gain scalability, which is, by the way, scalability in this case is the TPS, or the how fast the transactions can go.
Okay, and so Solana is the most scalable because of the speed. Where their transactions are near zero or like fractions of pennies, but they're super centralized at this stage. Now, with Matic, to me, once you get sub half a second or whatever it is, like when I was using, I saw you use Matic and I've used Solana, so they're basically were instantaneous, right? And near basically free. So from the user experience, it's similar, right? But then the question is Matic is an L2 chain. Like yesterday, we're recording this Bali time, November 21st, noon on 2021. I saw yesterday on Twitter, Matic makes a plea to, who did they make a plea to? They made
Uniswap?
Uniswap to please add their DEX to Matic, which explain to me what's going on there, because this is the real question is it's not really Solana versus Ethereum or Cardano versus Ethereum. It's really Ethereum plus Matic and its ecosystem versus Cardano, its ecosystem, and Solana, its ecosystem. And that's really so we've been kind of artificially restricting our view just to get an understanding, but it's really not just Ethereum with their super high gas fees and their slower block size. We've had this ecosystem, and Matic is one of the major players for L2 that's massively sped it up. So explain to me why, what was the Matic founders' argument, and what are the issues at play when trying to get Uniswap to be also support Matic? Explain that.
Yeah, so I think they filed a proposal to get Uniswap to support Matic, and I think it's nothing wrong actually. It's actually really good if Uniswap wants to support Matic, because I think SushiSwap has done that, and 1inch has done that as well.
One of my favorites. I invested in both Uniswap and SushiSwap, but one thing I really like about SushiSwap is, first of all, I think if I'm not mistaken, they offer a dividend. It's a small fraction, but they actually let you pay, whereas they give you money from the business, whereas Uniswap's is just like pure governance tokens.
Yeah.
which I'm sure are valuable, like a taxi medallion is valuable in New York City. But I'd rather, you know, if I'm going to invest in a company, quote unquote, or whatever it is, a DAO, I want some sort of profit to be
Right.
paid out. But the other thing that's more of a question is, explain to me why Uniswap doesn't, I don't understand technically, if Matic is sitting on top of Ethereum, are they using the same language? It's just like a L2 that's speeding up the transactions. How come Uniswap doesn't already support it? Explain to me why it doesn't work.
Right, because Matic is actually a layer 2 solution. Matic is actually a sidechain. So how do you know it's a sidechain?
Conceive of themselves as an L1 or a sidechain. Explain the difference between an L1, a pure L1, and a sidechain.
Sure. So a sidechain essentially depends on an L1, but it doesn't use the same currency. So you see, Matic uses Matic tokens, whereas Ethereum uses ETH. And
if
on layer
Ethereum
2,
died, would Matic also die?
Matic would stop functioning.
Their token would die.
Because, so Matic, yeah, their token would die because Matic tokens are actually ERC20 tokens. So that's one. Two, actually, sorry, the token won't die, but the blockchain would actually not work properly because Matic relies on Ethereum's layer 1 as a security layer. As in, if you want to make a transaction, every once in a while, they actually post or batch those transactions into the Ethereum layer 1. Without the layer 1, you have this disconnect between whatever they're doing and their history. So yeah, does that make sense?
Here was the big issue. Yeah, and so when I'm trying to use, I got my name, sharecon.eth, right? You and I bought it. Thank you for helping me do that because it ended up, ENS sent me like whatever, 190 ENS coins or whatever. And which was like at the time, I think when I checked it, it was like $15,000 worth of coins. Let's see if it's actually worth anything in 6 months. I can't really functionally use Ethereum, right? Because it's crazy. If I want to send a penny to my brother, it cost me $50, right, in gas fees, at least the last time I checked. And so if I have this sharecon.eth NFT, which is like an email address or like a PayPal address or something, right? I would have to, add Matic to my wallet, and will my .eth name work on Matic?
I think you need to port it, as in that NFT only exists on, yes.
It has to move up to the L2. It can't exist across both. So first I'd have to pay to move my thing up to Matic. And then anybody who wanted to send me Ethereum couldn't. They'd have to first, send me Matic tokens?
If you're trying to send someone money using the Matic network, yes, you'd have to use Matic tokens, yes.
So then you've got this, in my opinion, it feels like a janky system versus, so if you say Matic plus Ethereum versus Solana, right, to get to that super high transaction, like usability in terms of sending stuff and doing things, you've got this system that keeps having to go up and down. So I'd have to either completely live in the Matic world, and then every time I want to come down into the Ethereum world, I have to pay crazy high gas fees.
Yeah, that's right. So the user experience is definitely something that certainly, I think they sacrificed it, because if they wanted to make a layer 2, which by the way, people are making right now. So the real layer 2s are like Optimism, Arbitrum, and I think Uniswap is already in one of those. I think it's Arbitrum. So if
L2?
Yes.
So they support Arbitrum, but not Matic.
Yes, for now, yeah.
Okay.
I don't know what the roadmap is, but clearly, well, on Arbitrum, the gas fees are expected to be the same or about the same as Matic. I think their TPS would reach about 100,000 per second, and that's pretty good already. As in,
it's more than enough right now.
Yeah, it's a major improvement.
Instant and free, basically, right now in today's money.
So you can see that Matic is a sidechain because it uses its own cryptocurrency, or actually it's a token now. So,
it's a token on top.
The wording is different. Yeah.
So I was listening to a podcast on Axie Infinity, and they were talking about the exact same issue they had, which was they had millions of Filipinos who were opening wallets and wanted to buy their Axie has two. They have like the Axie coin, and then they have their in-game token. I forgot what the name is. I think it's
their in-game token is SLP.
It was there. They used some word for it called Enoch or something. I forgot. But anyways, they were saying that they were hyper limited in terms of their growth because the fees were so high just to buy into the game and everything. And so what they did was once they launched their own token, their growth rate exploded again because then people could just live within the Axie world and not have to constantly be dipping in and out of Ethereum and paying exorbitant fees. And so it like lowered the cost of getting into the game and playing. If I understood the podcast correctly. And so, but these tokens sit on Ethereum, and they're either side chains or L2s. And I still don't understand fully the difference between a side chain on Ethereum and an L2 on Ethereum, because it seems the same to me.
Right. So sidechain, again, the main currency of Matic is the Matic token. You cannot pay transactions using ETH on the Matic network. But on L2, it is treated the same way like L1, as in you have to use ETH, the native currency, to make a transaction. So does that make sense? Like you don't need an additional token to make transactions on the L2.
You make a transaction using the Matic token only.
On the Matic network, you only use Matic, but on L2s, like Ethereum L2s, you use ETH. Does that make sense?
Oh, okay. So because it's a side chain, would you call Ethereum a Matic a side chain or a?
Yeah, it's definitely a side chain, and I think some haters might not be happy with that. So the
distinction of a side chain versus an L2 is a side chain uses their own token to do the transactions, and an L2 still uses Ethereum.
Yes.
Okay. Now we have we have some definitions that are starting to form.
Okay. I think that's a good way of looking at it without getting into the complex parts. Yeah.
Yeah, I mean, it's so funny because the market and the practices and everything are evolving in front of our eyes. So like understanding definitions and what makes sense in terms of separating these things, because there's so much overlap in use cases, even though there's distinctions in the technology that underpins them. Okay, now tell us about. Let's go back to Cardano, which is something that's very special for our interview is actually you're probably one of I don't want to underestimate it, but I don't think that there's a lot of Indonesians coding in Cardano in Indonesia.
Oh yeah, I mean my class only has 20 people, as in this. How many? 20. So
do you think that represents a large chunk of the Cardano programmers in Indonesia?
I think some of them are not even programmers. So I'm pretty sure some might not actually pass, because when I saw some of the tests, which by the way, after this, I actually need to do some tests, but it's quite technical, as in I'm a programmer and I have to learn this programming language called Haskell.
Yeah.
And that's a pain in the ass because the Haskell community is quite small already. I think it's prominently used in banks, but now we have to learn it to actually use or get the entire benefit of using the Cardano blockchain. So, which, by the way,
go ahead.
In the future, Cardano will support Solidity, so you can write smart contracts, but via sidechain.
Is it like a Google Translate or something, like an NLP AI that's just gonna like auto? What do they call it? What is a compiler? It's not that, is it? Is it like
So it's like, I'm not sure how it works, but there's definitely has to be some sort of a translation layer. I think it's called Yella. I'm not sure, but again, Cardano is massive, as in it's not just a token. There's a lot of research and a lot of development inside it. And by the way, this is for the audience. I do hold ADA, and so there will be some bias. So take my word with.
I hold ADA too, even though I'm currently a Solana fanboy. I I am super impressed with Charles Hodgkinson's. If I'm, I don't even know if I pronounced his name correctly. Can I just make one quick rant about how great I think Cardano is in some ways? One, I think the founder is brilliant, and you can just, he's got so much, and he's super open. So you've got so much public, all of the things that underpin that system are public in white papers. You're going to be technically limited if you're not, like, I'm super technically limited, and I have to bank shot my trust level based on programmer people that I trust to tell me that they think this is XYZ aspects that are great. Number two, he's building it in a way with a vision to many, many non-financial uses of blockchain. And so I think people underestimate how blockchains are going to permeate so many other non-obvious aspects of human behavior that he's seeing a super long-term vision for that. And he's specifically built it for that, things like voting and other things like that. And so he had mentioned in his lectures on YouTube, and I've only listened to a handful of them because there's so many, that those types of things are, and that's why they're going secure and slow. And third, he's also has a specific vision for going hard in the developing world. Like, he's more motivated for use cases in countries that don't have as many, don't have any kind of traditional finance industry anyways. And so he's kind of building things for that layer. Whereas when you look at like something like Solana, you can see clearly like that thing has a hardcore use case for the modern economy, where there's like crazy high transaction rates already in digital form on Visa and MasterCard and all these other places, where it's going after, like, it's obviously going to be super useful in the developing world, but until things like Starlink and things come on board, I was looking at the validator nodes and whatever, and like in like areas, one giant section of the human population is in Southeast Asia, and I think there's only a handful, maybe 2 or 3 in like Singapore at this point in 2021 in November. And so you can see that like Cardano definitely has, in my opinion, if you take them at their word, they're trying to build a general purpose chain for many, many different use cases, which I think people who are hyper focused on the finance aspect of blockchains, because the original blockchain was money or whatever Bitcoin, whatever you want to describe Bitcoin as, it's some kind of money. And it's like very narrowly distracted the aperture or narrowed our aperture just to like money uses of blockchains, whereas Cardano is like thinking about other uses. Sorry,
right.
Thus ends my rant. So okay, continue.
Yeah, so I think one way to describe it is, again, coming back from the Ethereum world and moving into Cardano, is one of the things that I like is the foundation of the Cardano blockchain is designed to last a long time. As in, they've thought about how efficient they should be in order to last for the next 50 to 100 years or more. And also, when it comes to transaction per second, they're also working on something called Hydra, which could increase the TPS to about 1 million at its fullest capacity. So again, can you
dig into that? Tell me what you know about Hydra, because that is super interesting to me. Because at this point, the roadmap for Solana as an uncharted L1 is up to 400,000 based on 5 years down the line with the latest chips. Tell me about 1 million on Hydra. How does that happen?
Yeah. So again, you have to take it with a grain of salt here, because I'm not like I haven't dived in so deep into this yet. But what I do know is I think this works a bit, or it shares some commonalities with the Bitcoin Lightning Network. So the Lightning Network is quite interesting because traditionally, if you want to move money, you move it from point A to point B.
Okay.
But with the Lightning Network, instead of moving the money, you're actually just moving a receipt. A receipt that says that you own this much money. So no money is actually being moved. I think that's
is it similar to what TransferWise does, where TransferWise, if there's 4 people right? Two people in America and two people in the UK, it figures out how much, like say, like person A wants to send money to person A England wants to send money to person A America, and person B America wants to send money to person B UK. Instead of them actually wiring the money across, what they do is they figure out how much they want to send, and then they swap it within the country for 0, and then only send a little bit out across. And so you're saying instead of actually transferring money, the Lightning Network transfers
receipt,
recording of who
just
owns
recording
what,
it.
the recording of who owns how much Bitcoin rather than actual Bitcoin.
Yeah, if we oversimplify it, yes. Of course, the difference is in TransferWise, money is actually moving, as in it's moving within the country. But
yeah,
here, money does move at first. So when you open a channel between someone, you need to put your money. Let's say if you want to send $10, you need to put your money into a wallet that both parties share.
okay.
And then once both parties agree, like for example, if both fulfill the contract, then the money can be, or the receipt can show which part of this money is owned by someone.
Are you talking about the classic traditional finance world with the escrow?
I'm not sure, but
where is this example you're talking about coming from?
This is the Lightning Network.
Oh, okay.
Yeah. So again, Bitcoin is not actually being moved that much. It is moved when you first want to open a channel. Then once the channel opens, you can basically continue doing that.
You were telling me that because were we together when El Salvador? I was in Bali, and we were talking about this when El Salvador, the president of El Salvador, Nayib Bukele, or I don't know how to pronounce his name, but the president of El Salvador, he hopped on a live Clubhouse, and all the A players from Twitter also hopped on that Clubhouse, and he was talking about how he's going to move. I think legislation was happening live in the parliament or whatever down there in the Congress in El Salvador, and he was saying we're going to make Bitcoin the official currency of the country. And then after I listened to it, we were all excited, and I was chatting with you, and you said this doesn't make any sense because it's going to cost for small, like a taco seller on the street. You first have to open a channel, and that's going to be very expensive. Explain to me why the initial channel opening is the expensive part.
Yeah, so this is how the Lightning Network works. In order to create this bridge or this highway of transactions, you need to first open it. And then when you first open it, you are changing a state in the blockchain, in the Bitcoin blockchain. So by doing that, you need to pay. Right, you need to pay whatever gas fee is or whatever transaction fee Bitcoin has at the time.
Okay.
But then after that, it's already open.
It's open forever on chain.
Yes. And then you can close it,
and that costs money.
Yes, that's correct.
And so how do they get around the cost? Are you familiar with how they're doing it? Like, how does it make sense for a guy who's doing $20 worth of sales a day or even $10 worth of sales or whatever he's doing to open this channel? How much would that cost on the Lightning Network?
So I'm not sure if
use a third party. I think
you can. I can imagine someone can use a third party. So let's say the wallet has to be non-custodian. I think if they want to do this. So
so it's still like opening a bank account, and you may or may not own your Bitcoin at the end of the day.
Yeah, or maybe let's say every merchant has to do it, but then the customers don't have to. Once it's open, the customers don't have to pay the transaction fee anymore.
Do you know what the fees are on the Lightning Network? Sorry, go ahead.
Yeah, that's what I was trying to say, which is I'm not too sure.
On the Lightning Network? Do you know?
It's very, 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 very cheap. I think it's like a fraction of a dollar. Let's see. Let me Google it up.
Because the question is like when you go to, the question is like the whole idea of a cup of coffee or a stick of gum or whatever, right? I can totally, if there was a Solana credit card right now, I could totally buy things like basically, a chewing gum, a single thing of chewing gum, and because it costs, a thousandth of a penny or whatever to me, and then it happens instantly, I would totally do that. And that's obviously today, and maybe demand will eventually make Solana cost something to me. But even pre-crypto, when you would go to do small transactions at stores, like they'd have little signs up in America, like less, like no cards less, like no credit cards less than $5 in sales or something like that, or $10 in sales. Because I think like MasterCard and Visa or whatever would charge a flat 25-cent fee regardless. Something like that. They would do like a flat fee plus a percentage.
Yeah. Because in Bali here, I actually went to a cafe that asked me if I want to pay using card or debit, they charge a 2% fee. So I think that might be the actual fee.
I just put a deposit down on my villa, and it was they were like, you could send us like, they won't let me pay with credit card, which sucks because I wanted the miles. And then they were like, okay, well then you can wire us the money. And I was like, using TransferWise. I was like, okay, fine, I'll just go figure that out. And then they were like, actually, if you have cash, just bring us cash and we'll do it right now. And I was like, okay, well, so I had to pay, obviously pay like more ATM fees. I ended up spending whatever. I think I ended up spending $20 in ATM fees for $700 that I had to pull out of the ATM. But it's not nothing. It's something real.
Yeah,
like,
that is something.
A lot.
Yeah. So I looked at the transaction fee, and it says 0.04 cents, which means it is dirt cheap to send using the Lightning Network. So
wait, 0.04 cents. So like 4 cents. 4 pennies.
0.04 cents. So it's less than a cent.
Oh, it's 4/10,000ths of a cent.
Yeah, so it's dirt cheap because again, you're just moving receipts.
Wow, so Lightning Network is really that's pretty cheap, man. I mean, it's effectively the same. Once you get down to fractions of cents, unless you're doing a lot of little transactions, to me, it's effectively the same as a Solana transaction.
Yeah, so you can see that everyone's going towards this like really low transaction fee, and then but with Solana you can support smart contracts, and the TPS is a lot faster.
Explain to me why it's so hard to build smart contracts on Bitcoin if you can, and tell me when your brain is getting close to its terminal point, because these intense conversations, I have doped myself with a double shot of coffee, so we'll cut it short.
So I've only briefly looked into this, but the thing with Bitcoin is you have to talk about it pre-Taproot upgrade and then post-Taproot upgrade. Now, I don't know if you noticed, but Bitcoin just got a network upgrade like last week, I think.
I heard about it.
And so the week before that, it's if you want to write a smart contract, which by the way, you can write smart contracts in Bitcoin.
There's a couple people I follow on Twitter who are fanatical and committed that they believe DeFi will be built on Bitcoin. But go ahead.
Yeah. So again, from a programmer standpoint, there is a size limit on the scripts of Bitcoin before the Taproot upgrade, which means that Bitcoin scripts they're like pocket calculators, as in it's very primitive, and you can't write very, very complex code because the scripts it's too short. Now with the Taproot upgrade, they removed that limit completely. So now I think the Bitcoin scripts can be at any size. But the problem with Bitcoin is, so in Ethereum, the smart contract is aware of the entire state of the network, which means I can know, pretty much it's a bit extreme. So the entire blockchain, you can actually know what's going on through the smart contract. But on Bitcoin, you can't, it's the opposite. It's completely the opposite. Because I think you're not aware of anything other than the person that you're trying to send the money to. So you can't have a general state of
there's no single state awareness
the smart contracts don't know much At least that's what I'm aware of. Cardano, on the other hand, which by the way, actually shares a lot of commonalities with Bitcoin, they modified the way Bitcoin works. So there's something called UTXO. So UTXO, by the way, is an alternative to the accounting model. So accounting model is like a bank account where there's a bank account and then there's the owner and then there's the balance. Now in UTXO, instead of having that, you have essentially unspent transactions. And I can talk more about UTXO later, but the point is Cardano modified it and called it extended UTXO. And the goal is to broaden that awareness. So now Cardano, it knows, it's sort of in the middle between Bitcoin and Ethereum. It doesn't know the global state, but it knows some state so that it can support smart contract functionality on par with Ethereum.
And what is the advantage for smart contracts to know the full state of the network? I think that was the thing that Anatoly from Solana was saying is a huge advantage. And that's why he was making the argument that maximum transactions per second and maximum speed without sharding is superior to less with more sharding because of this single state awareness. And what are the advantages of it for smart contracts?
I think we have to, so again, the blockchain world is still
so
ongoing,
complex and evolving, and we don't really understand the long-term implications of a lot of these things.
These words, they might not mean anything, or they might be wrong.
They might be like cross talking past each other, not being accepting the same definitions. Because I've seen something like that on Twitter where people were like, "Oh, their transactions per second is a bunch of fluff because it's not the same as what transactions per second mean in Ethereum or something."
Right. So yeah, all these terms, it's actually, you have to take it with a grain of salt, and then you have to look into what it actually means. But I think the TPS might actually be slower if you have a global state, because the point of having a global state is flexibility. You can build more complex smart contracts with a global state. So something like a flash loan, I don't think it's possible in Cardano. So a flash loan is basically when you want to,
like credit card or whatever.
So it's a loan that you have to pay back in one transaction. So let's say you want to borrow $1 million. Within the same transaction, you have to pay back that $1 million.
Well, what's the point of that? What is the utility of something like that?
So I think they use it for arbitrage. And right, so
it's like bots taking loans and loaning out other bots. Okay.
Yes.
But then you better make sure you coded it correctly.
Yeah. And I think very recently someone did a flash loan on an NFT. So they bought the NFT and they returned it within the same transaction. So I think they just did it for fun, but I don't know what the point was.
And I did
but it's
hear
possible.
That some of the hacking related to was something to do with, like, one of the hacking techniques I did read in some articles that flash loans were involved in. I don't quite understand exactly what was happening, but somehow someone gets control of like a staked coins, and then instead of taking the coins out of the pool or whatever, they just take loans against it, and that's the way they hack the
So
something
that's
like
the thing. That. And also, while we're talking about hacks, coming from the Solidity world, I don't feel comfortable writing or building anything on Ethereum unless I have a security team, or unless I pay someone to review my code.
Everything. Okay.
Yes. So code audits, by the way, if you don't know, it's a huge bottleneck in the blockchain world, because it's so high in demand that people pay a lot.
Is there no security people to actually do it? Because Ethereum has. So you're saying actually, if I could just. You were saying actually that Ethereum is super easy to code on, but it's not super secure. But if you actually want a usable application, a dApp or whatever, okay, fine, you can write the code really fast. But then if you actually want the code to be secure, then you hit another bottleneck, is the security team. Like
right.
It's not easy to find them, pay them, and get them to do what they need to do that's a chokehold there.
Right. And to add more to that, Solidity itself is not perfect. Now, of course, I appreciate their design decisions, as in they really want to make it easy for people to code. And I actually felt that, as in it's really easy to build smart contracts using Solidity. But believe it or not, if you want to write production code in Solidity, you are not allowed to use their multiplication, division, plus minus operators. You are not allowed. Or
explain, what does that mean? Where? In Ethereum, the network?
Yes, using Solidity, sorry. So I'm talking about the program language now here.
Okay.
But it's not that you're not allowed, but it's just a security team would give a red flag to that.
And why are you not allowed?
Because let's say, so in Solidity, you have something called UI integer, I don't know, this is common in many programming languages, actually. So let's say integer 16-bit integer, 8-bit integer, something like that. Well, let's say that you're using 8-bit integers, but you wanna add 1 trillion plus 1 trillion, for example. The result of that will be 0 because of something called an overflow, which is if you want to add something where the integer is not designed to accommodate, it will just set the result to 0. So imagine if someone's wallet, you want to add money, and then it's 1 trillion ETH, for example, plus 1 trillion ETH, the result's going to be 0. And so to tackle that, they launched a library called SafeMath. And the way it works is it checks whether this could cause an overflow or not. And then if it causes it, it will stop the transaction. It will just
Is that like
cut it
similar
off.
to the DDoS attacks where they send a ton of, like, someone could attack by sending a ton of requests or whatever?
Oh, no,
Like
it's different.
Okay.
DDoS attack is more into the frequency of sending a request, but this one is more into...
It sends one number that is like a black hole. It's like the year 2000 bug where like it'll send a transaction that the computer can't calculate. That's like mathematically will send it to 0. Is that what it is?
Right. But hackers don't typically want to do this because they'll actually kill themselves, as in, this is something you want to avoid.
But you could actually have a kamikaze hack where they're not trying to steal your money. They're just trying to ruin your money.
Right. Also, one interesting thing is if you want to use, so rupiah, for example, rupiah's lowest denomination right now.
Indonesian rupiah?
Yes.
Okay.
The most common one is like 1,000 rupiah, right?
Yeah.
So 1,000 rupiah in a computer is a lot bigger than 1. So if we're dealing with, I don't know, countries with high inflation and it's like 1 million, and then you're trying to port that into blockchain, you're gonna have a very, very hard time. As in, suddenly you're dealing with big numbers.
So because of the right now, like a usable amount of currency usually here is like, like 1,000, or usually like I don't really use anything less than a 5,000 rupiah note to buy anything, right? So that's something like in dollar terms like 30 cents, right? Because of all the extra zeros, it's cheaper to send 1 USDC on a blockchain right now than it is to send 30 cents, which would be 5,000 rupiah, because of just the way that they've got all these extra zeros on their currency. Right.
It's just how computers work. Like the bigger the number,
extra numbers,
more bits.
And so, okay. Oh, that's super. That's such an interesting little tidbit for later if we ever get into what do they call it? Central bank digital currencies. Because if you're going to launch a central bank digital currency, right off the bat, it makes sense to slash all those zeros, because just to save the, obviously central bank digital currencies are just going to be blockchain representations of your currency. Like that's what a Circle is doing, where they have famously Tether with their supposedly real dollars, but maybe it's probably like mostly not actually USD. It's like commercial paper, aka like GE bonds or whatever, denominated in dollars that they're calling dollars, which is like, no, that's not dollars. That's fucking, that's GE bonds, right? So, whereas Circle, Jeremy Allaire's Circle, which has kind of grown at a much faster rate, which is like, people still want US dollar denominated transactions, at least for in today's world, because our minds are still in fiat and everything is denominated in fiat. So then they launched USDC, and what they do is they issue all this USDC coin, and then when you get it, you transfer on your fiat into USDC coin. So then they take that fiat and put it in a bank, right? And then they're like, okay, it's audited. It's just sitting here in this FDIC insured bank account, and they'll collect some of the money on interest or whatever. And then they literally launched their USDC coin on Ethereum, I think first, and then now I see I have some USDC in Solana. So like when I wanted to buy my name on sharecon.sol or my company's site deepdive.sol, at least initially I had to buy it in 21 USDC. So I had to first like load up Solana and then flip it into USDC that's sitting on a Solana wallet and then buy my name. And it's all this janky stuff. But long story short, eventually a Circle is going to come up with, whether it's an Indonesian version of Circle or Indonesian government directly, whether they copy the China model, there's going to be probably an Indonesian national chain, right? Probably, or maybe not, let's see. But if there is, first thing that they're going to have to do is slash all those zeros. And the reason why they don't do that is because for some reason they have this embarrassment. They're like, oh, well, we have a higher inflation rate. So every time we slash zeros, it's like admitting that we,
Yeah, not sure if that's allowed though. I don't know if that's currency manipulation or not.
Explain what's not allowed.
As in slashing the zeros? Because
they do that all the time. Like governments, after like bouts of 2 decades of like crazy high inflation, eventually they're like, okay, this doesn't make any sense anymore. We just restart. Like the euro did that, right?
Interesting. Yeah, because I think
Russia did it after the fall of the Soviet Union. They had hyperinflation or very high inflation, and then they were like, okay, after 10 years, they were like, this is ridiculous. Let's just start again. And like the Turkish lira right now is like 10-1, but like 20 years ago it was like 1,000,000-1 or something ridiculous.
Right. Yeah, I guess they might have to slash the zeros because. It's going to be very interesting because if you have 1 rupiah, typically you can't buy anything. But then if there's some sort of conversion or whatever, then yeah, maybe that could work.
Yeah, super interesting. Okay, so let's finish it off with one final question, and then with to be continued because there's so much more that we have to get on. We have to discuss for the next time. But I do want to hint that at some point you're going to have to tell us the story of the most epic. What would you call what happened to you? Botted? You got botted, or you got hacked?
I think I made a silly mistake, and this is for everyone. I think typically developers are more prone to this, but yeah, botted. Yeah. I would say.
Yeah, but I would say. As painful as that process is, of all the, I know a lot of people in crypto now, and I think it is a lesson in that we are on the frontier of computer science, and we're on the frontier of commerce, and there is no government. There's nobody to turn to. Yep. There's gold in them hills, and then when you go and get the gold, there's some guy behind your back waiting to snipe you and take your gold. And so there's it's crazy, it's Wild West. And there's another episode that I recorded with Kelly, who's in our Discord. He's an NFT guy, and he's dealing with botted and rug pulls and like botting attacks and all this like crazy stuff. And we're discussing just the NFT world, which was a subset of crypto, and now it's become so enormous in the last 6 months that like it's its own world of activities and behaviors and all these other things. And humans fighting bots is like a real thing, and then like humans with bots fighting other humans with bots is a real thing. And it's just it reminds me of the analogy of in the like 90s. There were all these airlines that had what's it called? They call it revenue management software, which was like simple algorithms to like increase their that seat 1A would be priced at $100 for the flight, and seat 1B would be priced at $200 based on what time you bought it. And everybody knows that you're paying different prices. Everybody's in the same plane as with basically identical seats are paying different prices based on price discrimination and algorithmic pricing. Now, what happened is in the 90s, okay, these big companies have their algorithms attacking consumers. And then all of a sudden, I don't know if it's someone reads, okay, well, how about we create consumer algorithms to drive down the prices? And so it ends up being that we're using Expedia or Traveloka or Google Flights or whatever. So consumer algorithms are battling company algorithms, and we meet somewhere in the middle, and maybe a little bit of human behavior tweaking on the other end. But it's literally like guys in the company with their bots are battling consumers with their bots, and we arrive at some market, some agreed market price. And something similar is happening right now in crypto, and it's early, although we also have both pricing battles and then also straight up like robberies and hacking that are happening. So I am, you know, I'll leave it at that. One last thing, tell me, so that was our hint for the next time, but tell me about what are the things that make you the most optimistic about Cardano? What do you think that it's doing that nobody else is doing on the scale that they're doing?
Yeah, so one is, again, the foundation of the blockchain is they admit that a blockchain is not designed to make fast transactions on its own, which means layer one just has to be stable. It has to grow at a very, very stable rate, as in it can't be too big too soon. And then in terms of the something called RealFi, or essentially people are trying to make blockchains more relevant to the everyday user. And so you should check out something called World Mobile. Okay. And that's a project that I think is also based on the Cardano network. Essentially, they're trying to decentralize the cellular system or the cellular network.
Oh, there's a company called Helium, I think, that's trying to do something like that, where basically everybody has Wi-Fi, and you could be, the reason why you can't have, everybody has passwords right now, obviously for protection and hacking and things, but then also people are like, I'm not going to pay for my Wi-Fi, and then some guy's freeloading on my Wi-Fi. Whereas if some guy could pay, right now I pay whatever, 20 gigs that I bought from Telkomsel, and I'm paying for the data, whatever it is, like, I don't know, like $10 for 20 gigs, right? And I could, if there was an automatic crypto exchange happening between my phone, my iPhone was like, if it wanted to grab some Wi-Fi from someone else, I think it's called Helium as a project. They could just get paid micropayments for the amount of data I use as my scooter drives by and it's picking up and using data, and you've got this like citywide mesh network. Because if you think about it, in a city, you're almost always covered by a Wi-Fi network. You're just not allowed access to it. So tell me about I think what you were going to tell me something similar.
Yeah, exactly. So the keyword is mesh network, and yeah, that's what World Mobile is doing. And also, Cardano is doing something with identity management. I think we talked about this, called Atala Prism. You should check that out as well. So again, it's not just a DeFi thing they're doing. It's also something that people can use day to day. So Atala Prism essentially is, let's say that you're a businessman and then you want to do business with somebody else, but you don't know this person. Now, if you use the Atala Prism, you can see the entire history of how this person's doing business. For example, if you're trying to do business with a farmer, you can see the history of this person, something like that.
It's very similar. It's like an Airbnb profile or an Uber profile, but for every other job on chain. And is it pseudonymous or identity is there?
The identity is there. It's designed to work. Identity. Yes, it's designed to work with governments, I think. So that's also another point, which is Cardano, I think it's one of the blockchains, or I think maybe one of the few blockchains that's designed to be regulated. As in, this might be like a big downside for some people, but the reality is, for example, with El Salvador, the government ends up being the one that's adopting it. And so you have to work with the government in order to get these technologies to get some mass adoption.
I think that's actually one one thing, and I'm glad you said that, because that is one thing that indicated to me was that Hodgkinson was traveling all over the world. He was meeting with heads of state, like in Ethiopia, and I think he was in Mongolia, but he seemed like he was trying to market to governments,
Right.
basically everybody outside China. And that does seem to, and he was trying to promote blockchain applications outside of money specifically.
Right. Right.
So, okay, go ahead.
Yeah, I can talk more about the technical stuff later. I don't want to bore you to death, but I like where the direction of Cardano is going, because one, it's not cheating its way to scalability.
Explain that. What do you mean? Who's cheating their way to scalability? And don't worry, no offense. I want to know what you mean by that.
Right. I just, going back to what I said, blockchain is not designed to make fast transactions on its own. So if you keep on pumping these blocks, at some point, you're making this time bomb. And so.
Oh, that was a subtle hint at Solana.
Solana is doing something interesting with Arweave, and I don't know how that's gonna work. As in, we're going a bit off topic here.
That was our discussion, which was that eventually, whereas Cardano, you could have it on 13 gigs or 130 gigs or whatever it is. You could have literally like one guy with a hard disk, and it could be, you could launch it into space and it would circle. You could have it on a mountain. You could always, that chain would live because it's so small. You can have it on a disk somewhere.
Yeah.
And it would always live. You could try and kill all the chains, but it would always pop back up on the internet because someone's going to have that whole chain on a single hard drive. Whereas Solana is super concentrated and it's got so much data that if it wants to survive, it better have giant, massive hard drives all over the world. And with such large data, it gets harder and harder to decentralize it as it's on this exponential growth of data construction. So the chain gets enormous. And so my argument was, over time, data storage goes down, cost goes down, distributing that would theoretically be easy. Your argument is, yeah, but maybe the data growth is going to be faster than the storage cost collapse. And it's going to be very, with petabytes or, gig or whatever, however many giant reams of data, it's going to be very hard to keep it decentralized. And it's not even decentralized right now. So
it's the way I see it is, if you choose to build using this method, or if you choose this to be your foundation, I think at some point it's going to get you. So again,
because of the centralization in the design.
Right. And we have to see, we all have to see, because it's very interesting. Everything is changing, and then engineers, they're always good at trying to figure something out.
But that's a super important point that you make, and I put a ton of emphasis and value in that perspective, because you're 100% right. Like, in the history of computing, every time programmers build on a system, if it's centralized and controlled by design or by default, there's always a bait and switch, right? Like Apple bait and switch. They're like, okay, you can, everybody come and program onto our app store. And then lo and behold, they're taking like pretty high rents, in my opinion, like 30% cuts, like Microsoft, and Amazon. If you put your stuff on Amazon's cloud, lo and behold, they're not technically looking into what you're encrypted in their cloud, but they're looking at the usage and they're like, oh, Twitch is blowing up. We're just going to go and offer them. I don't know what the deal was, but like an offer they couldn't refuse, which is take our $1 billion and go away, or we're going to come after you and compete with you. Or, Microsoft historically, famously killed off Netscape with their Internet Explorer, and they do everything. These companies do everything they can to, once they see the growth, they're like, if we control the platform, we're either going to extract rents at a very high rate, or we're going to compete and kill with you, or we'll try and buy you out, and we're going to try and capture that wealth and growth internally rather than externally. And so that's the whole argument, for the audience to understand, is why in the programming world and the computing world, decentralized computing and decentralized platforms are always, that is more in the direction of decentralization you get, the more good it is in the world of a programmer or in the world of people who are doing this stuff. Whereas the more centralized you get, if you're going to get more centralized, there better be a good reason for it, because you're increasing your risk tremendously, especially as you build value on a thing that is more centralized, because the people who control that centralized thing are going to figure out a way to extract value from you one way or the other.
Right. Yeah, totally agree.
Awesome, man. Great conversation. And thank you for being patient as I basically regurgitate back to you what you tell me, so that I feel like if I can re-explain it back to you, then you can point out flaws in my understanding. It's been a great conversation. Thank you for whoever's listening. And what's your Twitter handle?
It's Trevin Wisaksana. I have to write that down somewhere, but yeah, it's TREVINWISKSANA.
So that's your Twitter handle. Anybody who wants to follow you should follow you, and I'll put the links in. And I think more and more people, especially in Indonesia, should be. I wish I could speak Bahasa, because I would love to have this type of conversation in Bahasa, because the programming community in Indonesia is, in my opinion, likely to grow tremendously. And this is one of the few countries that I think is super well positioned to benefit tremendously from blockchain technology, both because unlike the US and China, which are from a government, from a people perspective, you can see there's tons of dynamism in the US crypto ecosystem. The Chinese crypto ecosystem has been mostly suffocated, even though you can see there's massive talent coming out of China in the space. But these non-US, non-Chinese domains of innovation, I think, are actually going to be, in some ways, tipping the balance one way or the other in how a lot of these things go. And we're early days in this space. Thank you, Trevin. Talk next time.
Yeah. See ya.
Bye.